Dubai population, you may have heard if you've been listening to us, or indeed if you're just on WhatsApp, because I have lost count of the people, nearly 4 million, who sent me the statistic clock in the last 24 hours. The majority of them working in real estate, I'd like to point out. I don't know if they were proving a point or not. We are joined by Matthew Green, Head of Research at CBRE. Matthew, good morning.
Good morning.
Let's look at that 4 million mark and what it means for our infrastructure, what we've got, what we're building, and what we still need. We'll start with houses. Questions about whether our real estate market is a bubble. The argument has always been from the real estate sector that no, this is a population play. Do these numbers prove them right?
It's been a very strong growth story post-COVID, that's for sure. We can't really dispute those numbers. Nearly 6% growth year on year in population. Housing supply, I think, is definitely kind of keeping pace with that. We have a pipeline of more than 300,000 units for delivery over the next kind of 5 years. So we're definitely going to see, I think, a continued softening of rental rates. We've seen that over the past couple of years anyway, as in the softening of growth. So we're down to about 7%.
If the current rate of population growth continues and the current rate of building launches, new developments keep going, are we going to end up with too much, not enough, or just right?
I think it would be location driven. So I think you can already see it within certain communities where you've got significant supply coming into the market. You can already see that the rents have already started to level out, and in some cases even maybe soften slightly. But you'll find others where you've still got growth of 10, 20% year on year.
Because it's the glut that people have the fear of when they're talking about real estate, isn't it? That once everything starts getting handed over, a couple of years, all of a sudden, pendulum's going to swing and we are going to have too much.
I think certainly if you're a speculative investor, yes, but look, a lot of people over the last 10 years have moved from being renters to being homeowners. And I think obviously that side of the market isn't obviously quite so quick to move when things change. So
the other side of the real estate arm here is commercial. Office, warehousing. We've got TCOM this morning investing more than 1.5 billion dirhams into warehousing and manufacturing space. We hear a lot about the office supply glut. What does the longer term picture look like for that with this population rise?
Look, I mean, both of those sectors are quite heavily undersupplied at the moment. If you look at commercial offices, we've had rental growth of around 20% year on year. The supply which is coming through is not enough. I think our biggest challenge for now is that occupiers cannot find the space that they want. We've got landlords obviously being more aggressive in that market, particularly in the strata space. And that's obviously leading to quite strong rental growth there as well, over and above really probably where the rent should be.
What happens if that doesn't change?
Occupiers move less, so we'll see obviously less new absorption. But I think given the dynamic at the moment, you're starting to see obviously more and more developers encouraged back into the commercial market. You've even got luxury residential developers like your Omniats launching off-plan office projects again in Business Bay. And we haven't really seen that for obviously quite a number of years, with good reason.
Schools, we've got school groups telling us they're in the high 80% for occupancy. Where are we if this rate of growth continues in terms of having enough seats?
I think that's a perennial issue for this market. We school fees continue to obviously go up. Obviously, that is governed by the KHDA, so there is obviously some control there. I think we had 5 new KG schools opening at the start of this term, but we continue to need more schools to, I think, kind of keep a lid on where those school fees are going to go. And
of course, the biggie is roads.
Roads improvements, obviously we have the DFC road improvements, which is massive, I think, for that financial centre and for the future growth. The Blue Line, obviously, is another very important infrastructure project for this emirate, given that it goes through Jeddah, Creek Harbour, International City, and very other densely populated areas as well.
We are building new roads at a rate of knots. There seems to be a new sort of road plan announced every couple of weeks, but obviously we're constrained by how long it actually takes to build these things. When do you expect, realistically, the traffic to and I know this is how long is a piece of string, but to ease off, to get a little bit easier on commutes?
I think we have to kind of assume that this is an ongoing challenge for the market here, as it is for any city. Dubai is seeing much stronger population growth than would be normal in most cities. 6% year on year, as per the statistics. That is not a normal growth rate. So it's very difficult, I think, for the RTA and for other kind of stakeholders to be able to keep up with that. But they're always on top of it. They're always thinking forward. So I think, look, the next couple of years will be important to see how that actually pans out.
Is there an element of new normal in this? That if we are becoming a bigger, more developed city, that one of the things that comes with that is a slower, longer commute?
100%. And I think if you went and spoke to people in Kuala Lumpur, in Bangkok, or in many other global cities, they would have a much worse commute than we do.
It's just part of what happens as you get bigger.
I think it's normal. I mean, look, the normal for us was 20, 30 minutes down to the downtown. I think in most cities that would be a kind of preferable route over what they have to kind of go through.
How much of a difference can the Etihad rail train make?
I think, look, for me, first and foremost, the importance of that is more around the industrial and the economic impact from moving goods and services. For me, the secondary part is the moving of passengers, because I think we probably need more density in certain locations to really make that work. And I think, for me, it's much more around the goods part of that.
What can we attract as being that bigger city? What does 4 million plus people mean in terms of the kind of international names, the services, the company? I'm thinking Disney, for example. You get to a certain mass and a certain status in order to get Disney looking at setting up where you are. So what else could we be becoming big enough for?
Yeah, look, big names like that, as you say, they don't come for nothing. And I think that's probably a name which has been chased all over this region for quite a bit of time. But I mean, even outside of the entertainment space, I think when you've got major hedge funds coming into your financial centres, like say PIMCO or Bluecrest, some of the recent ones which have set up in DAFC, and Abu Dhabi's going through a very similar growth story at the moment. That's the ones that for me really move the needle, because they're bringing massive amounts of capital, global investment reach. And I think those are the real kind of game-changing shifts that we've seen post-COVID.
30 seconds left with you. What will you be watching for next? What is the next play for this size of city?
Look, I think continued infrastructure improvements are going to be kind of crucial. I think, again, things like we've seen announcements round about the FC, new tunnels, new roads, that will allow the future growth of the city in line with the 2040 master plan. Without it, it would become more difficult and more problematic to attract people, because I think traffic and congestion would be even more of a challenge than it is now.
Matthew Green, Head of Research at CBRE, talking to us about the infrastructure that is needed for 4 million of us.